Hello traders, you're welcome to this video. In this particular video, we are going to be discussing the bearish pennant pattern. So basically, we are going to be looking at how to identify the pattern and how to use it to predict future price movement and how to use it to determine your entry points for sell trades and where to set your stop loss, where to set your take profit. Alright, let's get right into it. So basically, the bearish pennant starts with a strong, sharp downward move, like we can see here. A strong, sharp downward move, often called the flagpole. So in this case, this is the flagpole. Now, this downward trend is essential because it indicates significant selling pressure in the market. So when you want to identify a bearish pennant pattern, the first thing you should look out for is this sharp movement downwards, a steep, nearly vertical price drop. Now, this drop should happen over a relatively short time frame. Like you can see that between 11 o'clock, as we can see here, between 11 o'clock and 22 o'clock, this is the 1 hour time frame. That is why. So just about 11 bars, we had seen the flagpole form, showing strong momentum in favor of sellers. Now, the next thing for you to do is, after the sharp drop, look for a consolidation. In this phase, price action begins to move sideways. As we can see here, there was a sideways movement forming a small symmetrical triangle. As we can see, that this is a symmetrical triangle forming here, right? You can see a symmetrical triangle forming here, okay? And then this is the triangle or pennant. Remember, this is the bearish pennant pattern. So this is the symmetrical triangle or pennant. Now here's what to look out for: lower highs and higher lows. You can see that we have lower highs, and we can see we have higher lows, right? This creates the triangle shape as the market tightens, and then during this consolidation, the trading volume typically decreases. Yeah, the volume typically decreases as the market pauses after the big move. Now, this phase represents indecision between buyers and sellers. But since it's preceded by a strong downward trend, it usually resolves with the market continuing to fall, as we can see here. Okay. Now, after you must have already identified all these, you should know that the bearish pennant is a continuation pattern. It's a continuation pattern. So when you find this pennant on your chart, just know that the bearish trend is likely to continue because it is a continuation pattern, meaning the price will likely continue in the direction of the prior trend once the consolidation breaks, just like we found happening here. Here's what this pattern signals: the sharp downtrend indicates strong selling pressure. The tight consolidation represents a temporary pause where the market is catching its breath before resuming the downward move. So once the market breaks out of the pennant to the downside, the pattern is confirmed and the price will likely continue to fall. So once that breakout once it happens, you can enter your sell trade, you can enter your sell position because the bearish move is likely to continue. As we can see, it came down all the way to this point. So had it been we had entered the sell around here, we could have considered setting our stop loss just right above the pennant, above the symmetrical triangle, the edge at this particular point, right above the swing high, and then our take profit could have been perhaps at the next support level. Now your entry point should be right after the breakout. Yes, it should be right after the breakout from the consolidation phase or from the pennant to the downside. So that is the reason why here would have been like a perfect opportunity to enter the sell trade. And then after that you can you can also decide to look for a strong candlestick close below the pennant. So if you had wanted to like get extra confirmation, perhaps you would have decided to wait for this candle to fully form, and then perhaps you would have entered a sell right at the start of this second candle, meaning you would have entered around here. And yeah, that would have also been a good end. That would have also been a good entry point. Now for the stop loss, just set it above the highest point of the pennant, or well, you can consider either here or here. This is also a good point to set your stop loss, as it's going to protect you against false breakouts. Because if you decide to like set your stop loss just here, you know, there could be some movements again. Price can perhaps retrace back into the pennant, so it's ideal that you set it outside the pennant. Okay, now your profit target, the most common method for setting your profit target is to measure the length of the flagpole. Yeah, this is like one of the common methods for determining your take profit level. So the initial sharp downtrend, you can decide to measure the length and then project that same distance downward. So for example, if we had, let us use this as a very practical example, we can see like about 71,000 points, right? 71,000 points. So would have just set our profit target at another 71,000 points. Perfect. You can see that it's accurate. So we would have considered, after entering a sell, we would have just measured about 71,000 points from the breakout, and we would have taken our profit somewhere around here. That is like one of the best methods for setting your profit target. So that is it for the bearish pennant pattern. By following these steps, you'll be able to confidently spot the bearish pennant and execute trades with precision, taking advantage of strong continuation moves. Always make sure you manage your risk properly. Do not use an amount you cannot afford to lose. So I hope you found this video insightful. Kindly like, subscribe for more.